Get going here. I want to thank everybody for joining us here today. Once again, my name is John LaMaster. I'm a life sales director here at IAMS. Joined here by Myles from F&G. We're going over a couple of sales strategy and storytelling strategy around their IUL product here. But first off, I want to get started telling a little story about IAMS, our value proposition. Just want to start off here, our new producer builder and bonus. This is applicable for your first 180 days getting started up with new contract. Here at IAMS have various levels all the way from the $100,000 production of FIA level to $1 million. So you can see the various options have there. At that $100,000 level, you can take $750 cash all the way down then to that $1 million level. You can have some preset annuity appointments, some workshops that we will pay for, and then some marketing there too, so videos, brochures, whatnot. So good ways to get off to a good start with us here at IAMS and have some either cash or marketing put into your business. Next off, we have our business builder. So we have a couple here. We have our referred producer program and our marketing reimbursement. So our greatest way of saying thank you to you guys is, is a referral. So want to put some money back into your pocket. So you'll get $50 one-time bonus when your referral contracts with us here at IAMS on the life or annuity side of things. And then once that producer, that referral starts writing business, we will kick you out an override on their production. And essentially not an override, I guess I should say, just a thank you there. And you can see the various levels of what we will cut checks out to you for based off life target, FIA production, single premium life, and then MIGA business. Secondly, we have here our marketing reimbursement program. So we'll, share costs with you on marketing. So we'll pay $100 in marketing reimbursement per $100,000 of FIA production, and then you can see the, we'll do $200,000 per $100,000 of single premium life production, and then on the target life side, $200 per $10,000 of premium. So good way to split costs here on marketing and growing your business. What we pride ourselves on here at IAMS is our back office support and customer service. Charles founded the company 35 plus years ago. That was our main pillar. So once, the old verbiage of work harder, not smarter, let us take some things off of your plate, either if it's helping you run illustrations or proposals on both the life and annuity side of things, case design assistance. With our IAMS website, you have forms at your fingertips. We'll have submission to commission support there. So working through underwriting or business processing there, help you there, once I said, like with life and annuity quotes. And then we want to be sales partners with you, myself as a sales director and anybody on my team. And then on our team on the life and annuity side, we want to be sales partner, not just an order taker. So I want to help work through cases, give you different sales ideas, marketing strategies. And also we utilize paperless contracting through SuranceBay, so help speed up that contracting process and walking through that process. Next, we have our IAMS website. If it is not something that you're taking advantage of, you're missing out. There's going to be some excellent sales tools available there. It's accessible 24/7. Our sales resource library, you could spend at least a day or two going through there on various fact finders, sales concepts, client presentations, all from life insurance focused sales, and then also on the annuity side of things, once again, online forms, industry links, annuity grids, long-term care production grids. So a ton of resources out there. So if you have not signed up for our website, I highly suggest you to, especially if you're contracted with us now. Next, as we are all aware, the industry is changing and focusing heavily on e-apps and getting away from paper applications. I try to steer everybody towards e-applications. I think it's the best way to do business. Applications get submitted way quicker and reviewed much quicker on the carrier side of things. So a couple different vendors we work with here: Luma, Firelight, iPipeline, and Sunfire. So if you have any questions on e-applications and our offerings here at IAMS, do not hesitate to reach out to anybody here on the sales team. Our best number, 800-255-5055. Our creative services, we have a team of 5 or 6 people there on the creative team that do an awesome job can help you out with agency, digital, or turnkey solutions. So they're on the agency side, can help create logo, business cards, stationery, help out with advertising. They do a great job on the digital side of things, so helping create websites that is your own, and we will do unlimited revisions and whatnot on that. So the great thing about our team is we specifically work with insurance professionals like yourselves, so we know what you're looking for. We know they're in the business every day, so they know the verbiage and kind of what insurance professionals are looking for with websites. Can help out with social media, email marketing, and online newsletters. And then traditional, they can help out there with traditional paper marketing there with handouts, brochures, flyers, newsletters, and postcards also. So if you have any questions there on a creative services team, once again, reach out to us, 800-255-5055. Also, we've started offering complimentary marketing analysis. So we'll take some time here. It's no different than the first time meeting with your clients and prospects. We'll kind of do a fact finder here with the sales director, kind of get to know where you're at in your business right now, where you want to be, what your goals are here for the end of the year, looking into next year, which is crazy to think that we're heading up into Q4 here. So help you out define your target markets, strengthen your brand, explore new marketing opportunities, and create or expand your digital footprint. So once again, this is free of charge. So reach out to a sales director here to receive your complimentary marketing analysis. Next here we have IAMS Wealth Management. So it's our RIA side of the business that we created 5 or 6 years ago, really gaining traction with the IAMS Wealth Management. So it's a great opportunity if you have your Series 65, partner with us, help gain more of a wallet share with your clients and prospects. If clients or prospects, if clients purchase multiple products through you, the more products and services that you can offer, the more likely they'll be a client for a lifetime. So I'm going to launch a poll here for about 30 seconds. And if you are interested in receiving additional information about IAMS Wealth, alrighty, thank you guys for who have input there. If you'd like some information, somebody here on the sales team will be reaching out to you about IAMS Wealth Management. Next, I want to point out our Life and Annuity Academy. So we usually hold 3 or 4 of these a year. Hosted 2 so far. We usually partner with 2 or 3 different carriers on these academies. So kind of the topics there typically kind of usually follow the same format. Going to have multi-million-dollar keynote speakers, ways to create an endless stream of prospect, go over some advanced sales strategies, macro tax planning, help build your brand. We'll have somebody from IAMS Wealth Management to give their value proposition there too. So great way to spend some time on your business with other top producers from across the country to focus and hone in on some new sales and marketing strategies. So we do have one coming up here in September that I do believe is full, but looking at having one in October in the fall. So I'm going to launch another poll here. If you would like some more information on our Life and Annuity Academies, let us know and we'd be more than happy to give you those details. Alrighty, get that one closed up here. A few more slides. We do have our top producers qualification trips that we host every 18 months. So this qualification period was running from the start of 2024 here through June 30th of 2025. So next year we will be heading to Quebec City at the Fairmont hotel there. Every picture that I've seen is, and as you can see here on the screen, it's a awesome facility. And if you want to know where you're at production-wise and for qualification, reach out to one of your sales directors here. Or if you'd like some more information on our Top Producer Summit, do not hesitate to reach out. Once again, here our best number, 800-255-5055. And lastly, here are a couple of our social media pages. Follow to keep up on updates of what's going on in the industry, and specifically here at IAMS, have our Facebook page and our LinkedIn page. And I will point out then our YouTube page is a great resource. All of our webinars then are uploaded there. So if you're unable to attend one of the webinars that you were interested in, always have access to them there. obviously then here we have our phone number and then also our IAMS website that I mentioned earlier. So that'll wrap up my side of things here. So I'm going to hand over, let Myles become the presenter. So Myles, I want to thank you for joining us again, and excited to hear the story of what's going on at F&G and what's going on there, and the sales strategy and story that you have ready for us here today.
Absolutely. I appreciate the introduction there, John. Hopefully you can see my screen. I don't use this platform as often, so I'll go ahead and let you confirm that for me.
Yep, I can see it.
All right, great. Exactly what I wanted to hear. I hope everyone had a nice long weekend. I know I did. I live in Chicago, and it was beautiful weather this weekend. Makes me a little sad that we're nearing the end of summer, and frankly, we're getting towards the end of the year, and as soon as we know it, it'll be the year-end push to get production in. But I think as we go through what I have to talk about today, F&G has a great value proposition, just like the team over at IAMS, and what we have to offer. And I truly believe that we have one of the best IUL products in the industry. But the challenge most of the time is how do we get clients to understand the power of an IUL or cash value life insurance? So this story will certainly be pertinent or convertible to other types of cash value life insurance. But here at F&G, we are in the IUL space. So if you're familiar with us on the annuity side, we sell indexed annuities, and we sell indexed life products on the life side. So we're really a great and strong carrier in the index space. So with that, I'll just quickly introduce myself as the National Account Manager. So no matter where you're located, if you're working with IAMS, I support you across the nation. My email address, of course, is listed on the screen there. And then at the end, I have some more, I have an additional slide with contact information where you can get a hold of me, my phone number, and then my internal partner as well. But let's go ahead and dive right in, right? The tax diversification conversation. Again, it can be a difficult storytelling process when talking to clients about the benefits of cash value life insurance. If you're anything like me, the first insurance product that I ever learned about, and I really thought for the longest time that was the only insurance product before I got into the industry, was whole life, right? It is cash value life insurance, but that seems to be the product that they teach kids about in high school, college, and even right into early adulthood. You just don't have that much knowledge when it comes to life insurance. And when it comes to cash value life insurance, right, we know that IULs can offer a lot more upside potential than a whole life product can offer. So as we're going through our conversation today, roughly the next 45 minutes, and I'll be sure to leave some time at the end for questions, but we'll talk about how to reposition our conversations when talking to clients about cash value life insurance, right? We're not only just talking about a death benefit. This is not the insurance products that were in the industry 30 years ago that only offered a tax-free death benefit to beneficiaries. Our products today offer a lot more benefits that clients can access and utilize while they're alive and living. Then understanding the basics of the tax landscape. Now, I'm not a CPA or attorney, but we have some fundamental information in our slide deck today to help aid our conversation and help clients understand all of the types of retirement tools out there and how cash value life insurance can certainly be one of those key players when it comes to saving for and helping supplement retirement savings. And then the key story that you received in the marketing email highlighting this webinar is the 5-10-20 story. What I love about this story is it's going to be applicable to a multitude of clients. It's super easy, simple. It doesn't take a marketing piece or a 30-minute conversation. It truly is just a quick and simple story that you can use with most, if not all, of the clients you're working with. And then we have a case study. And then at the very end, I do have some product details. We have some exciting changes that came to our life product last week. And I want to go through those in a little bit more detail. So we'll wrap things up going through our flagship product and some of the changes that we've seen, and I'll also allude to some of the changes that are coming in the near future as well. So with that, right, reshaping the life insurance conversation. Again, this is the products that are available in the market today are not the products that were available 30, maybe even 25 years ago. It's a modern portfolio. I certainly believe that, again, F&G has one of the best, if not the best, IUL solutions out there. And not only do we have the death benefit protection, which we all know that life insurance, right, that's the bare basics of life insurance has to offer, but we also have the ability for retirement protection, right? Again, as I mentioned, that supplemental retirement savings. And generally, we're using the supplemental retirement conversation when we're talking about life insurance. But keep in mind, depending on your client's goals, maybe they're looking to start early and they want to have funds set aside to purchase a vacation home, a lake house. Maybe you're working with parents and they're looking to put a policy in place on their children to help save for college, right? We have a lot of design flexibility when it comes to life insurance. Living benefits, right? We're living in an aging population. People in our family, community, all around us are needing access to some type of care that's generally not covered by health insurance. And living benefits are certainly one of the most popular features of life insurance in today's environment. And then, of course, meeting financial goals and needs. Again, thinking about the case design, meeting with your client, understanding what they're looking for, and then positioning life insurance to be a great resource and tool for them to utilize throughout their life. So one story that I like to talk about, or to get clients in the mindset of planning for or saving additional funds for retirement, is this magic number in retirement. So I like to say, if you have a couple, husband, wife, or two that are in a relationship, they need to eat 3 times a day. If each one of their meals was $5, of course they're going to be eating. The two are going to be eating 3 times a day, 7 days a week, times 52 weeks out of a year. And if we were to multiply that by 20 or 20 years, again, this is at $5 a meal, which is very reasonable in my opinion. It would cost a couple, again, eating at $5 per meal, more than roughly $218,000 in retirement just to eat, right? Just to do the fundamentals of life. It's going to cost, again, over 20 years, $218,000. And I know most of you, I know I am saying $5 a meal, right? We can't even buy $5 footlongs at Subway anymore. So just think about if they were just to be able to eat for $10 a meal, we're looking at north of $400,000. So again, helping clients get into that mindset of, right, is just Social Security going to be enough? Likely not. Are you able to save enough with what you're allowed to put into your 401k if your client has a 401k? We all know that IRA contributions are very low, and clients are not able to supplement or offset with an IRA alone. So aiding in that conversation or helping them help diversify their retirement savings is going to be cash value life insurance. So again, just an easy statistic to throw out there, and this can easily be written down on a piece of paper to help clients, or even on a calculator, justify how much money they're truly going to need in retirement, right? And I always I don't like to scare clients into thinking about retirement, but it's really hard for an individual to think about their future selves, right? If you're thinking about today and whether maybe you want to buy that new TV or possibly go out there and maybe go on vacation, right? Future self is more important than, or today's self is more important than future self. So it's really hard for us in our society to think about our future selves. But if we're taking a look at the next few slides, this will help clients get into the mindset again of why life insurance is so important, can help them along the way. And we do have marketing pieces on all 3 of these next slides. So if anyone's interested, These are consumer approved, and you're more than welcome to reach out and we can get these ordered. And John, I'll share these with you afterwards so you can share them with the group as a follow-up. But unexpected losses, right? Bare bones, fundamental basics of life insurance, right? So just to point out a few, out of every 12 children in the United States, they will experience at least one parent or one death of a parent or sibling by the age of 18, right? 73% of Americans die with debts, on average $62,000 in the red, right? They have a negative net worth. 73% of Americans have a negative net worth when they die of $62,000. And then only 52% of Americans have life insurance, and 41% of those adults say they don't have enough life insurance coverage. So just some interesting statistics, and I bet you have a good chunk of your clients where this is falling and resonating with them as well. Life insurance is certainly not an easy conversation for most families, but it's certainly one of the most important. Retirement protection, right? My personal favorite aspect of talking about life insurance, because not many individuals know the tax advantages that life insurance can truly offer, and the retirement protection conversation, right? On average, men live 19.2 years beyond the age of 65, and women live just a little bit longer at 21.8 years after the age of 65. Yes, I'm admitting, if we have some females on the line here, that women do live longer. Yes, they do have longer longevity in them. Of course, we know that, and happy to admit that. I was asked that in a meeting once, if I'm willing to admit that women do live longer. Yes, that is the case. Nearly half of retirees retire sooner than they planned, right? Nearly half, 50% of retirees retire sooner than they planned. 35% due to a hardship, such as poor health or disability, which is hard, right? They're retiring earlier than they expected. And majority of the time, I'm seeing individuals who are 10 to 15 years out from retirement. This is when they're really getting serious about saving. And half of those individuals are not going to have the time that they thought to save for retirement. And then Americans age 65 and older have an average income of only $38,000 a year, right? So as we're thinking about how much clients are saving, and as I mentioned, individuals are truly getting serious about retirement savings in their maybe late 40s, early 50s, and a cash value life insurance can be a great way to help them diversify their retirement savings, offer death benefit protection, help protect against living benefits like a chronic, critical, or terminal illness. So we have a product or solution here that meets a lot of needs for clients. And then healthcare expenses during retirement, right? An average couple may need $315,000 in retirement to cover healthcare. And if we take a look at the $218,000 that we discussed for clients that they'll need in 20 years worth of retirement, a couple, now we're looking in the realm of $500,000 plus in retirement for healthcare and eating. So this is nothing that's, right, this is none of the fringe items that they get to experience during retirement. This is just healthcare and eating, nearly just over $500,000. So you can see what is needed in retirement is certainly adding up quick here. Estimates show nearly 70% of retirees will need some type of long-term care, right? Some type of long-term care need, right? We take a look or think about the 6 ADLs, right? 70% of retirees will need some type of long-term care. The median cost of a nursing home care is roughly $8,800 per month, or just under $109,000 a year. And then this is an interesting one as well, especially when we take a look at the long-term care and chronic illness products out there. The average long-term care stay is 3.7 years for women, and it's 2.2 years for men. So very interesting. And if we take a look at that, $108,000 times roughly, let's say 4 years, let's round that up on a woman. She's going to need over $400,000 worth of long-term care coverage. And depending on where you're located, what states, the type of lifestyle that your clients are living, we know that that can easily be more than $108,000 a year. So all of these kind of scare tactics that is what I'm calling them, right? We're talking about what does a client's future hold. All of these can, or life insurance can help meet the need of all of these. Healthcare expenses, we have the retirement, and then we have the death benefit protection. So understanding the tax landscape, and again, I'll reiterate, I'm not a CPA, accountant, or attorney, but these are all very fundamental and basic. So let's take a look at 3 buckets here. We have the taxable bucket, and this is, right, there's going to be multitude of other assets that will fall in here, but this is generally going to be applicable to most customers and clients that you're working with. So taxable, CDs and money markets, mutual funds, savings accounts. We have tax deferred, so your traditional 401k, your traditional IRAs, and then we have tax advantage. We have Roth IRAs. We also have Roth 401ks that would fall in this bucket, and then cash value life insurance. And if we would put this on a great chart here, one of my favorites, if we take a look at the 4 types of assets, we have the taxable assets here, the CDs, mutual funds, savings account. We have our 401k. This is going to be your traditional 401k. It's going to be the tax deferred. And then we have our tax advantaged on the far right-hand side, the Roth IRAs and cash value life insurance. You can see that life insurance is going to check all of these boxes besides one, and that's the tax deductible contributions. As we know, or maybe you don't know, we're using after-tax dollars to fund life insurance. One is because that allows our death benefit to go income tax-free to our beneficiaries. And then 2, we're able to offer a tax-deferred asset, the cash value inside of a life insurance contract, specifically here, an IUL grows tax-deferred. And if it's structured properly, which is the key, structured properly, like we don't have a modified endowment contract, or clients don't let the policy lapse before their death if it's heavily loaned out, they're able to take tax-free distributions, which is the key part that I would say more than half, likely more than half of Americans don't understand, that cash value can have a savings component that grows tax-deferred and allows for tax-free distributions, right? One of my other favorites is there's no penalty for early withdrawals. So maybe you're working with an individual who says, hey, I want to retire at 55, 60, and I want to wait until my full retirement age, which is roughly 67, before taking Social Security benefits. Well, what if we could bridge that gap with cash value life insurance? Do we need to cover 10 years if they retire at 55? Or maybe we just need to cover 7 years if they retire at 60, but we can use this tax-deferred asset to help them offset, or maybe they just want to supplement some retirement savings. So again, no penalties for early withdrawals. The tax-free distributions, which the IRS allows if clients take a loan or borrow the cash value from their contract. And of course, there's no required minimum distributions at the age of 72 when it comes to cash value. So this offers a lot more flexibility, and it will not increase Social Security taxation or Medicare premiums due to the structure of insurance in general. All right, so moving on to our 5, 10, and 20 story, right? Contribution, accumulation, and distribution. Again, I told you this is a very simple, easy concept to understand. And I believe this webinar is being recorded. If not, I'll be able to share this slide afterwards. But to get the conversation, I simply write, and this can be on a piece of paper, a napkin, or if you're doing a virtual presentation, you can easily pull up a notes and share your screen. So I simply write, we have $5, $10, and $20 on the corner of, again, a napkin or piece of paper. I then tell the prospect or my client that this represents 3 retirement plans, right? I go on to tell them that every dollar of the retirement goes through 3 phases. Of course, the contribution phase, the accumulation phase, and the distribution phase. And the purpose of this conversation, I'm going to represent the contribution phase with the $5, right? So the contribution phase is the $5. The accumulation phase is the $10. And then the distribution phase is the $20. Now, as it pertains to these three phases, I have good news and I have bad news to share. The bad news is that the IRS will require you to pay taxes on at least one of these three phases. But the good news is the IRS doesn't dictate which one it will be. Now, leaving this decision up to you based on these investments you choose, right? So leaving these decisions up to you based on these investments, which one do you choose? All right? So you have the $5, which is the contribution phase. We have the $10 accumulation phase, and the $20, which is the distribution phase. Which one would you, Mr. or Mrs. Client, choose to pay taxes on? Right? And give them a few seconds. But I promise you, this never fails. Individuals will always choose the $5, right? You want to pay taxes on the smallest amount of money. So of course, if you're going to choose one of these, you're going to circle the $5. And then I respond, well, isn't that interesting, right? Allow me to ask you a question. Where is the bulk of your retirement assets currently invested? Pause for a few more moments here. And most will respond with the majority of their retirement savings is in their employer-sponsored 401k, right? That's generally for most clients. They have a majority of their savings in a 401k. To which I respond then, and which of these numbers is going to get taxed on these assets? Then of course, recognize that they are going to pay taxes on the $20 contribution. So if we're thinking about the traditional IRA or that tax deferred bucket, the traditional IRA or traditional 401k, their money is going to be taxed on the $20, right? It's going to be taxed at some point. They received, there we go. Sorry, I wasn't clicking along like I should have here, but let's get everything here out on the screen. Come on. All right. Well, as you can see, right, clients will automatically choose the $5. That's what they want to be taxed on, but a majority of individuals in today's economy have their retirement savings in some type of tax deferred asset, again, as a traditional 401k or IRA. So the additional benefits that an IUL has to offer, right, cash value life insurance. On the flip side, we pay taxes on our money, and then we use after-tax dollars to fund an IUL, and that allows for that tax-deferred growth. And again, if it's structured properly, we allow for those tax-deferred distributions or tax-free distributions. So it's a self-completing plan, which means we want to design the contract so clients can take as much out of the policy and borrow as much as they can, but still keep the policy in force until the day that they died. So that's a self-completing plan. So that loan that's built up over the years will be paid back at the client's death. There's no set limit on contributions. As we know, with most traditional or Roth IRAs or even a 401k, there are limits to what clients can pay in. That's not the case when it comes to insurance or IULs, right? An individual, they want to pay $100 a month, we can design a plan that will allow them to do so. Or if you have a client who wants to pay $100,000 a month, we can design a plan that will do so. Again, no pre-age 59 and a half penalties if they want to take distributions or withdrawals or even loans, right? Loans, those tax-free loans. Before the age of 59 and a half, they can make catch-up contributions. And again, there's no RMDs when it comes to cash value life insurance. So pretty simple and straightforward conversation here. I made it a little bit longer than what it should be, but I hope going into a little bit more depth helps aid in your conversation and how you can and work this conversation into your storytelling with your clients. So putting this into a case study, right? So how does this actually work in real life with clients? So if we're taking a look at the design of the contract, again, F&G sells IULs or fixed index universal life contracts. So that's what we're specifically looking at here. Generally speaking, the client is going to be the owner and the insured. They get to name their beneficiaries, but of course, we can talk through or work through different types of ownership structures. We want to minimize the costs inside of the contract, right? The whole goal is for that tax-deferred growth and that tax-free distribution. So we want to minimize the cost because life insurance does have a cost associated with it. So we want to use the bare minimum death benefit allowed by the IRS that allows us to contribute, again, as max as we can, but limit the amount of insurance we need, but we don't want it to become a MEC or modified endowment contract. That's when things start to get into the taxable range. John or I, or even our sales team here at F&G can help you walk through that. It's very easy to design a contract that's not a MEC, but max funded. Client pays a scheduled premium over a multitude of years. And again, we can design this to meet your client's needs. So usually short pay, meaning we pay premiums until retirement age. Generally speaking, we like to keep that at 65, but of course we can always change that depending on your client's goals. Maybe they want to pay till 60. They want to pay for 5 years, 10 years. We have a lot of flexibility when it comes to the premium paying schedule. Now, the policy cash value can be accessed during retirement for supplemental retirement income. Keeping in mind, again, that if your clients are looking to retire early, want to bridge the gap before they start taking Social Security benefits, or maybe you have a client in their 30s, I always like to use this example, where they want to buy a vacation home or lake house in their 50s, and they can use their cash value life insurance to help meet that goal as well. And then the benefits will receive valuable income tax-free death benefit, the beneficiaries will receive the death benefit income tax-free. Generally speaking, there's not going to be any tax concern there for most individuals if they're choosing their family or close relatives to be the beneficiaries of the contract. So case study, we have a 45-year-old male. We're assuming a preferred non-tobacco underwriting class. In this case, it's a chiropractor making roughly $400,000 a year. Now, keep in mind that this is a very, this is a individual who's making a great income, but we can use life insurance for individuals who are certainly making less than this, or maybe they don't have, maybe they're self-employed, right? That seems to be a common individual looking at cash value life insurance. Plans to retire at age 67 so we can receive full Social Security benefits. He targets 10% of his annual income for retirement savings. I would say this is likely not uncommon because if you think about a majority of your clients, 45, they probably have a family with at least a few, maybe one child in the household. Chiropractor went on to school a little bit longer than your typical college student graduating with a bachelor's degree. So they're nearing the age where, right, they're spending their money on their family, thinking about college planning, but thankfully for this client, he's also thinking about retirement savings. So targeting $40,000 annually for savings, he's maxing out his 401k contribution, which happens to be $22,500, which leaves him with $17,500 additional an annual amount to contribute to some type of savings, right? Now he could contribute to a CD, a regular savings account. Maybe he's contributing to a traditional IRA. And if that was the case, then we could subtract those out as well. But more than likely, this individual is going to have to save more than 10% of his annual income to help continue with the same lifestyle during retirement. So in this example, we get a $290,000 death benefit starting out. So funding an IUL at $17,500 annually until the age of 67. So we have it designed the most efficiently. We get a $290,000 death benefit starting out. And what does that give us during his retirement years? So if we take a look at it, he's contributed over that 22-year period from the age of 45 to 67, $385,000, right? That's not a small chunk of change, but he's contributed $385,000. And we're able to design this IUL with an average 6.44% rate of return and he's able to take $85,000 a year out of the contract, income tax-free. $85,000 a year for 25 years out of the contract, which is remarkable, right? And if you were to add up 25 years worth of those contributions, that's $2.1 million that he's able to access in retirement that's income tax-free, right? So 25,000, and I pulled up my calculator just to make sure the math on the screen here is right. 25 years times 85,541 gets us $2,138,000 again worth of tax-free retirement income. So the contributions, looking at the chart on the right here, he's contributed after-tax dollars of $385,000. At the age of 67, he's accumulated, again, this is at a 6.44% rate of return. He's accumulated nearly $800,000 worth of cash value in his contract. And if we break out the contributions that he's able to borrow, again, for 25 years, he's able to borrow $2.1 million worth of cash value out of his policy. And that's from the age, again, of 67 for 25 years. So that's supplementing his retirement income until the age of 92. And of course, when we're illustrating loans, we're just trying to illustrate or show how life insurance can, help benefit and supplement retirement income. But really, the client can decide in their retirement years if they want to extend or shorten the number of years they want to take income. When it comes to an IUL, again, we don't have RMDs on an IUL, or maybe the client has had seen really significant growth in some of his other type of retirement savings and doesn't need to borrow money from his IUL because he can access retirement income via other avenues and save an IUL or the IUL loan for when maybe his other assets aren't performing as hoped. So jumping in, changing gears a little bit, talking about F&G's Pathsetter product. The Pathsetter product has really seen explosive growth over the past 5 years. And that's because it's an easy to understand and transparent product. We have one of the most simplistic products in the industry. And if you take a look at all of the content that we just talked about before, you know that talking about life insurance, what type of life insurance, how much someone needs, what can they save for retirement income, right? We're putting a lot in front of our clients, so it's important that they have an easy to understand and transparent product because we don't need to make this story any more complex than it could already be. So taking a look at the basics when it comes to our Pathsetter product, right? We'll get some of these out of the way, the nitty-gritty details, and why it's been so popular is really the issue age and the minimum death benefit. So whether you're working, again, with a high net worth individual or someone in the middle market, right? Someone in the middle market looking to help supplement some retirement savings, we can offer coverage on individuals between the ages of 0 to 80. I would say our target market as a carrier is 0 to 65. Now, that's not to say that we can't consider someone in their 70s, but we're generally seeing a majority of our clients or sales come in for 0 to 65-year-olds with a minimum death benefit of $50,000. As I mentioned earlier, if you've got a client who has $100 a month, maybe $50 a month on a juvenile, or someone who has $100,000 a year or a month to pay into their policy, our Pathsetter product is really built for individuals across the spectrum and with a wide variety of budgets. The distribution options. This is not talked about enough in the insurance space, but as we discussed earlier, that life insurance in general allows for tax-free distributions. Well, what are the distributions? Well, clients are able to take a loan from their contract, right? As most of us know, likely if you go to the bank and you take out a second mortgage or you maybe refinance your first mortgage and you take the equity out of your home, that's not taxable to you as an individual because you're borrowing the equity from your house, right? So the IRS says, because that's a loan, you're paying back the loan, you're being charged an interest rate, we're not going to tax you on that gain if you're going to take it out via loan. Well, life insurance offers a similar feature. That's the tax-free loans that clients are able to take out of their contract. A unique feature that is really can't be touted by any other carrier is here at F&G, our variable loan rate, which is the most common or popular type of loan when it comes to IULs, is capped at 5%. So clients will never be charged more than 5% to borrow the cash value out of their path-setter product. And the feature that no other carrier can tout, because some of them do allow for a 5% contractually guaranteed variable or participating loan rate, is ours can actually be lower than 5%. Looking back, when I was looking at our current variable loan rate, and this was a couple of weeks ago, so I don't know if it's changed, but it's currently at 4.65%. So clients can actually be charged lower than 5% via a variable or participating loan to borrow money from their path-setter product, which is huge. And keep in mind, when it comes to life insurance, there's no repayment obligation while the client is living. As we talked about earlier, the life insurance contract is self-completing, so clients generally don't have a payment schedule or repaying those loans back. They let the loan sit on the contract, and then at the time of the insured's death, that loan would be paid back. Again, they'll never be charged more than 5%. Now, for the sake of simplicity, I'm not going to go into the other loan features, but I will mention we do allow for fixed loans on our path-setter product, and we do allow for wash or zero net cost loans in contract years 11 and on. Now, account value enhancements. We actually now offer 4 index strategies that offer a 1% no charge or no fee bonus starting in the second contract year. And I think this is extremely important because we want to offer a lot of upside potential when it comes to an IUL, but the downside protection is certainly one of the benefits we all look at using fixed index annuities or fixed indexed universal life contracts. So we have 4 index strategies that offer that 1% no charge, no fee bonus, and years 2 and on, no matter the index performance. We offer a persistency bonus of 0.25% that's credited to the policy's account value in contract years 11 and on. I like to say that that's a thank you bonus, right? Thank you, Mr. or Mrs. Client, for keeping your policy in force and active. We're going to give you an additional 0.25% credit in contract years 11 and on. And then if all of that wasn't enough for you, the floor on our product here at F&G is 0.25%. You're likely familiar with the phrase zero is hero. Well, there's absolutely no chance, no matter the index performance, no matter the index strategy selected, that your clients will receive a 0% rate of return with our path-setter product. So if we break down the guaranteed interest and the account value enhancements, right? And year 1, your client will at least, again, no matter the index performance, will at least receive a 0.25% guaranteed rate of return. In contract years 2 through 10, if they're using one of the 4 index strategies that offer that 1% bonus, their minimum credit has now moved to 1.25%. And then in contract years 11 and on, with the persistency bonus, we have inflated our floor to 1.5%. And keeping in mind with those bonuses that if we have a positive return from our index, your client is not only going to receive the that rate of return from the index itself, the index performance, but they're also going to receive that 1% bonus, assuming that they're utilizing one of the 4 index strategies that offer the 1% bonus. Now, if you're hopefully contracted with F&G on the life side, you should have received some news, and this was just announced actually 2 weeks ago, but they became available last Monday. We have 2 new index strategies, 3 different flavors here, with the first being the Morgan Stanley U.S. Equity Allocator Index. This is really an index strategy built for today's market and future forward. And I'll go into that in a little bit more detail here in a few seconds, but I do want to mention we also have a BlackRock Market Advantage Index. So if you're familiar with our annuity products, which I hope that you are, we have this same exact BlackRock Market Advantage Index available on our annuity products. The BlackRock strategy offers a 160% participation rate and that 1% bonus in contract years 2 and on. Again, that's 1% bonus no matter the index performance. All three of these strategies do not have a cap, so almost unlimited upside potential, and there's no spread or fee when it comes to any of these strategies. Now, going back to the Morgan Stanley U.S. Equity Allocator Index, I like to shorten it and just say the Morgan Stanley Index. We have two different flavors. The first being a high participation rate, which is at 110%. So again, the Morgan Stanley Index is still uncapped. There's no spread or fee, and we have a high par at 110%. And then we have the second flavor, which is the Morgan Stanley Index, with a 90% participation rate in that 1% bonus that's credited no matter the index performance in years 2 and on. And it all depends on the client's outlook, depending on the future and what that may hold. Now, your BlackRock Market Advantage Index is going to have a 6% targeted volatility. It has a bond, cash, and equity component. So depending on the market volatility, it can rebalance to a bond, cash, or equity component, fitting within that targeted 6% targeted volatility. Somewhat comparable and standard with most volatility-controlled index strategies out there. What I'm really excited about with the Morgan Stanley Index, as I mentioned, it's a strategy built for today's market and future forward, is it does not have a bond or cash component. The Morgan Stanley Index is allocated 100% to U.S. equities. We have made up of equity, large cap equities in the S&P, and then we have U.S. tech stocks as the equity component. So if we're taking a look at the actual performance that we've seen from the S&P over the past couple of years, financial consultants will say that majority of the performance of the S&P has been made up of tech stocks and large caps. And the Morgan Stanley Index is made up of those large cap equities and tech stocks, and it does not have a bond or cash component. And it also has a 12% targeted volatility, which is huge. One of the highest volatility targets, if not the highest volatility target offered on an index strategy. And again, you have two different flavors depending on if your clients want the high participation rate at 110 or the little bit lower participation rate at 90% and the 1% bonus. Moving on, there are 5 additional index strategies available on PathSetter. Those first 3 we talked are the newest addition to our PathSetter product. I'll point out just a few here, with the top one being our S&P 500. Annual point-to-point has a 100% participation rate and a 12% cap. The one right below that is an S&P strategy that offers that 1% bonus, slightly lower cap at 9%. And then we have our Barclays Index, which has been around for roughly 5 years, both on our life and annuity products. This is a volatility-controlled strategy as well. It has a 5% targeted volatility made up of bond, cash, and equity components, participation rate at 170%, and a 1% no charge, no fee bonus in contract years 2 and on. And just keeping in mind that you can diversify when running these illustrations, and just know that you don't have to be an expert when it comes to running illustrations. Allow F&G or the IAMS team to help you out there, but we can certainly diversify depending on what index strategies you and your clients prefer. So moving on to living benefits, and I know we're running up against time here, so I'll have to speed through things a little bit. But all 3 major living benefit riders are automatically included on our PathSetter product as long as your client is a Table 4 underwriting class or better, which is huge. There's no charge to have these riders on their policy. And for the critical illness and terminal illness riders, clients can accelerate up to 100% of their death benefit, or $1 million, and at the time that they qualify. And the chronic illness rider, which would be most comparable to a true long-term care rider, although it's not a long-term care rider, allows clients to, over the lifetime of the contract, take up to 100% of the death benefit, or $1 million, whichever is less, although we limit the acceleration up to 25% of the death benefit per year. So clients could take 25% year 1, and then subsequent accelerations in contract years 2, 3, and 4 to maximize the lifetime benefit when it comes to the chronic illness rider. And of course, the qualifying event would be unable to perform 2 activities of daily living or have a severe cognitive impairment. So not only do we have the right? The downside protection that our path-setter product offers. We have significant upside protection. We have living benefits built in. So we're really, right, this is, in my opinion, one of the best IULs out there due to all of these features that are automatically included. Then moving on to underwriting, outside of the sales story and a little bit of product information, right? Majority of clients or individuals out there thinking about purchasing life insurance don't purchase life insurance because they think it's too invasive. Well, with F&G's exam-free underwriting program, we truly make it easy, efficient, and hassle-free for our clients. 99% of clients that apply with F&G between the ages of 0 to 60 and up to and including $1 million worth of coverage do not have to complete a paramed exam, blood or urine. That means, right, we do not require a paramed exam, blood or urine, for clients between the ages of 0 to 60 and up to and including $1 million worth of coverage. 90% of applicants are approved at standard or better, which means there's a small portion of clients that are table rated, right? Their health is a little bit less than your average American, so they pay higher cost of insurance charges. If your clients fit within our exam-free parameters and they come back or would fall within a table rating, we can go all the way down to a table 8 or 8 underwriting class with our exam-free underwriting program. 50% of our exam-free applicants are approved within 5 calendar days or less, right? Again, I think John mentioned this in the beginning, right? It's more important for you to work on your business than working in your business. So we're able to get clients approved fast and quick with our exam-free underwriting program, where we get approvals within 5 calendar days or less, 50% of our exam-free applicants. Now, I will state, to be completely transparent here, exam-free underwriting is not an impaired risk type of underwriting program. It is not a guaranteed issue, simplified issue type of underwriting program. Your clients do have to be insurable. We go down to a table 8 before we would decline a client. And then in some instances, depending on your client's health history, our underwriting team may order a phone interview or APS. But again, we do not require a paramed exam, blood or urine, when it comes to clients that fit within these parameters. And now keep in mind that F&G is great at underwriting applicants outside of these parameters. Maybe you have someone who's 61 or a client who's seeking $5 million worth of coverage. We're certainly a great carrier for those individuals as well. This is just our niche underwriting program, exam-free underwriting. So moving on here, I'm going to skip over this slide. I'm going to pause here, turn things back over to John. You have my boss, Nate Gertink. My contact information, again, my name is Myles Brown, the National Account Manager that supports all of you in the IAMS team. And then my internal partner, Sandy Beheimer. She's very experienced, likely knows more than I do, since I'm out on the road quite often. So you're more than welcome to reach out to us if there's anything we can ever do to help you. We want to earn your business, and please let us know how we can do so.
Alrighty, thank you, Myles. I appreciate the time, everybody's time here. Great product, obviously, there with F&G, one of our preferred carriers, and great relationship we have over there. So good opportunities, that great sales concept, always looking for good sales concepts that are especially quick and easy to explain to clients. So appreciate you sharing that. And then wanted to point out there too, the living benefits. And then on top of it, that underwriting, it's a great way. I know you mentioned, Myles, I think clients are, and agents themselves are, hey, it's too invasive. I don't want to ask the questions. My clients don't want it to go through meds. So if we can get, that, 50% up to, in 5 days, a policy issued, it's a great, value proposition there. So thanks for sharing that. So obviously reach out to myself or anybody else here on the live sales team if you have any questions on F&G's products, or reach out to Myles directly, but we would love to have the opportunity to talk about F&G more. So appreciate everybody's time here today. Enjoy the short week and make it a great day. Thanks, guys.